Hello, yeah. What's up, my friend? My name is. Oh my god, it's Young Mooch, man. Welcome back. Welcome back to this YouTube channel. Welcome back to this YouTube channel, guys. Yeah. Alright, beginners, I'm here for you. Beginners, today I'm here for you. Yeah, I know as a beginner you also ask yourself, now, hey, how do I know when to trade? How do I know when to buy? How do I know when to sell? What do you guys look up to? How do I know, guys? How do I know? I'm here for you guys. I'm here to answer that question, guys. Basically, there are three occasions in which market delivers or market moves. Market can move into an uptrend, and how do you know a market is in an uptrend? How do I know a market is in an uptrend? A market in an uptrend will tend to make higher high, higher low, higher high, higher low, break the higher low, the higher high, make a higher, another higher high, retrace, make a higher low, break the higher high, make another higher, new high, higher high, retrace to make a higher low. That's basically how market moves. Yeah, that is an uptrend. A market does not go into an uptrend forever. It also moves in a downtrend. That's a downtrend. What's a downtrend? A market will make lower low, lower high, lower low, lower high, break this lower low, make a low, another new lower low, fail to make a higher low, a higher high, make a higher low, break a lower low, make another new lower low, fail to make a lower high, higher high, make a lower high, break the lower low, make a new lower low, fail to break lower high and make a lower high. That's basically a downtrend. Let's go to a ranging or a consolidation. This is a consolidation. This one, market fails to break a lower low or a higher high and remains in a range, but of course the market will either break up or down, because a market will never remain in this situation forever. It will either break upward or downward. Yeah, that's three ways in which market delivers. The next thing is to determine how to enter a market. For instance, a market is in an uptrend. How do you enter? This is an uptrend. Let me show you some of the important things to consider before entering. Yeah, this is an uptrend. Basically, when you notice a break of structure, this is a break of structure. This is where big break of structure. This is when a market breaks this. This was the previous higher high. Market retraced to make a higher low, but eventually broke this higher high and made a new higher high. Retraced. This is the best thing to know and to identify as a beginner. The next thing, after break of structure, wait for the market to make a pullback, a retracement, a healthy retracement. How do you know a retracement is healthy? How do you know a retracement is healthy? Use your Fibonacci tool. Make sure the zero area touches the last lower, the last higher low. This is a higher low. Make sure the 100% level, this is the, wait a minute, the 100% level should touch your higher low. The 0% level should touch your new high that was made after a break of structure. Wait for a market to retrace below the 50% level. Wait for a market to retrace below the 50% level and look for entries there. For this uptrend, look for entries there. How do you know the entry? The first thing, guys, you have looked into market structure. Market structure. Market structure. Market structure. Market structure. This M represent market structure. The next thing you look into is area of value. Area of value. Area of value. A means area of value. Area of value. Okay? Wait a minute. Area of value. Area of value. The next thing, after you have looked into an area of value, this is our area of value. Here we have an area of value below the 50% level. Area of value. The next thing, after identifying an area of value, you look for entry trigger. An entry trigger. An entry trigger. Wait, let me put right here. Entry trigger. Entry. Yeah. Entry trigger. So basically we have M, A, E. Entry trigger. The last thing, but let us first tell you how or what are the entry triggers. These basically are what tells you enter into this market, buy. We have different kinds of entry trigger. We have candlestick patterns. We have trend lines. We have a support or resistance. We have a moving average. We have a channel. Those are different kinds of entry triggers. For instance, the best candlestick that will get you into this trade can be a hammer. Let me show you how a hammer looks like. A hammer. That's a hammer. This one has a long wick. This wick is almost 2 times. This wick is almost 2 times the size of the body. This is the body, this is the wick. A hammer, we have tweezer tops. Tweezer top is for the bearish. We have tweezer bottom. Tweezer bottom is basically like this hammer, but the size of the wick is smaller. We have that one. Then we have another one. This is we have that one. Then for tweezer bottom, the first candle is bearish, the next candle is bullish. This is a tweezer top, no, tweezer bottom. The next candlestick that can get you into trade is evening star. Let me draw an evening star. So basically this, my computer is misbehaving. So basically you have to learn all this that will get you into trade. They will help you get into trade. I have said we have bullish engulfing pattern, we have hammer, we have dragonfly, we have a morning star and a tweezer bottom. Okay, in my next video, guys, I will teach the beginners how do you know this kind of patterns. How do you know? Yes, how do you know? Okay, how do you know? Or what are these candlestick patterns? I will teach you about that in the next video I'll be doing. After doing that, looking for an entry or a trigger, look for exit. Exits are 2. You can exit a market when you are right, or you can exit a market when you are wrong. How do you exit a market when you are wrong? This is when the market goes against you. This is bullish. Let's say you entered here, your target was here. Where is your stop loss? Was this high? Where is your stop loss? Your stop loss will get you out of the market if you are wrong. This is your stop loss. A stop loss is basically below. You can use an ATR to measure your stop loss. A stop loss is basically 1 ATR below this low. You measure this low, you minus 1 ATR. That's your stop loss. Maybe basically there. Your take profit is here. This high. You target this high for now. This high. So the market will get you profit, and that you will call that a day. Yes. So that's one of the ways you can get into the market when it is bullish. When the market is bearish, in case the market is bearish, the opposite is true. The opposite is true. You look into this and the opposite is true. Yeah. So I hope you have learned something. In case the market is ranging, let me show you. In case the market is in a range, in a range, this arranging market, and one day you wake up in the morning, let's say you wake up in the morning and you find your market here. You find your market, it's here. How do you know? Or how you don't counter trend? You don't counter trade. Just make sure you wait for the market to be here. Wait for confirmation. How do you confirm? This way. Wait for a shift in. This was a downtrend. A market was making a downtrend there. Wait for a shift in market structure. This is a shift in a market structure. A shift in market structure. This one, or change of character. This is a change of character, since the market refused to make a lower high, and instead it broke this lower high and made a higher high. That is change of character. Wait for a change of character here. Wait for a change of character there. A change of character. Then wait for a retracement. Then this will get you into a trade. It will basically get you into this trade very well. That will happen here. This one will happen here. And when you do this, I guarantee you will be correct. And once you enter here, this is long. Once you enter here, you target this high. Your stop loss is below this low, or any other low here, so you don't get stopped. Is below the previous lows, 1 ATR below the previous lows. And you are right. Guys, you are right. Yes. So basically, that's how, guys, you enter into either a trending or arranging market. I hope this is useful. I hope you like this video. I hope you get to subscribe to this channel. I hope, guys, you get to share this video and grow this channel, as I try to bring more content, more new content every and each day. Yeah. So in the next video, I've told you guys, I'm going to show you how to identify the candlestick patterns that trigger your entry, and I will tell you about the bid, the ask and long, short, bullish, bearish, and spread. What those means in trading. And also I'll show you the actively traded currencies, so you don't get wrong when choosing your currencies to trade. Yes, and that's it for this video. I hope you like this video, you subscribe, you share, and you comment. Please make sure you comment on what you will like me to go through next time. So have a lovely day, have a lovely evening, have a lovely night, have a lovely morning, in case it depends on what time you are watching this video. Okay guys, I love you, take care.